Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, April 27, 2021. I was working on the charts I'm watching this morning to get some charts out to you guys, but there's actually so many things worth watching right now. I figured it'd be a lot more efficient to put it in a video, get these charts out to you this morning. All right, first off, we have quite a few market-leading stocks reporting this week, so I'm gonna go over that. I'm gonna give you a quick overview of the markets. That's how we're gonna do this video. Major indexes, as well as those market-leading stocks that are set to report. There's some big semis, big tech, and then I'll rifle through various charts of the futures that I'm watching. So pretty much looking at different asset classes, treasury bonds, commodities. It sounds like a lot, and I'm going to do my best to keep it pretty condensed. I'm not going to go to the ETFs and ETNs of each of the futures. I'll mention which ones you can trade if you're interested, but again, there's a lot there with the grains, wheat, things I've been highlighting lately, natural gas, treasury bonds. Again, there's just, like I said, a lot of charts that I'm watching right now. So let's dive into it and try to get this done as quick as possible. Starting out here, quick overview of the broad markets. Nothing in the technical posture has changed for a very long time. We've been walking up with divergence here. You can see we had back here divergence when the primary uptrend line was broken on QQQ. I'm referring to the uptrend line off the March lows. We had the biggest correction in months, or quite a while. About a 12% drop in the Qs and about 13% in the stock futures. And then we put up, as suspected, when we put in a divergent low, once we broke out above this level right here, that recent trading range, it said that would odds favor a marginal new high, and any marginal new high, which we now have, would be and is a divergent high. So there it is. I just take the lines, extend the divergence, and so where we had some pretty big negative divergence back here, it led to a 12% drop. We have even larger divergence, which would indicate, there's no guarantees, but that would be indicative of an even larger drop to come once we get a trend reversal and once we get sell signals. So that's what I've been talking about quite a bit lately. We don't have any sell signals. Where do those come? I believe they come on a break of 334 on QQQ, and then when we look at the S&P 500, you need to get a break on the 60-minute chart of about 410.40 right there. That's the support level that I think will do the trick. See our divergence just extending as we eke on up to a marginal new high in SPY. This is a 60-minute chart, and on the S&P 500 daily chart, same story, divergence, divergence, divergence. While we remain in an uptrend, primary trend line was broken back there, back tested. Marginal new highs so far with a potential secondary uptrend line. Again, that's bigger picture daily chart stuff, but again, I'm focused right now on these near-term levels, 60-minute charts, 410.39. I'll get to the stock futures in just a second here, and when I do the futures charts of all the other various asset classes. All right, let's just talk about who's reporting this week, because this is most likely what will move the stock market. In order of how they report, and again, this is not all inclusive, just some of the bigger names I'm watching this week. Today, after the market closes, we have AMD, Advanced Micro Devices. When I zoom out, this is a daily time frame here. This purple line is our primary uptrend line. So AMD is dancing on that trend line now. We are on major uptrend line support that comes all the way back to 2018. That is a big, well-defined, and should be a well-watched trend line with big support, in my opinion, price support at about 73.77 right there. So these are the levels to watch. Bulls want to see this level successfully defended, especially that 73.77 price support. Plus you can see down here the red line, which came into support here, here, and here recently. That's the 200-day exponential moving average. So there's a confluence of key support levels just below on AMD, and again, this is one of the leading tech semiconductor stocks, and that's it. So bears want to see a break of that level. If you're looking to short AMD, I think a solid break, especially close below 73.77 ish, call it ish, but close enough. That should do the trick, and you can see potential targets listed here, $59.14, $48 right there. and potential all the way down here. Otherwise, the trend remains intact. Any new high anytime soon will extend these divergences because there's very sharp divergences you can see on AMD right now that will not be taken out anytime soon. The stock could pop 20-30% on earnings and it's still going to have a divergent high based on how low these indicators are lagging. So again, divergence is not a buy or sell signal, whether it's positive or positive or negative divergence. It is an indication that a trend reversal is likely. That's all it is. There's divergent high, divergent low, divergent high, divergent low. You get the point. Pretty simple stuff. So just once you get the positive or negative divergence, be on the lookout for a buy signal or sell signal, or in some cases a pullback to support. For example, here after those divergent highs, you could have bought pullbacks to the trend line. Now back here we didn't have a trend line; it started forming at that point, and there it is. So next up, an even bigger stock, more important to the indexes, and Microsoft reporting after the close today. MSFT, same story. Series of divergent high right here. We had a correction, divergent low, and this is right now. Actually, let me move these lines. Let me take this line, put it, grab that line. This is our current divergent high right here. See the divergence down below. Indicators making lower highs and prices making higher highs. So that would probably take us back. You can see there's some support right around there. But I think Microsoft probably come back in for another test to that 228 level ultimately if you're looking to position on a swing trade. Again, it's earnings. To take a position or even go in home tonight, long or short, Microsoft is a gamble because it can go either way. I always say that more often than not, which is far from always, but more often than not, the charts are indicative of where a stock's going to go after earnings if it's clearly bullish or bearish. In this case, we have, although the trend is bullish, we have some clear negative divergence just like we had back there at that point. And that led to that drop, and I wouldn't be surprised if that was a earnings move right there. Next up, GOGL. There's two share classes of Alphabet. This is one of them, Class A, and there's your primary uptrend line. There's a negative divergence, pretty pronounced divergence on Alphabet. So there it is. Even if it pops a little bit, if it pops quite a bit, you could take the divergence out. But again, this is a common theme here. A lot of these have divergence and nice clean trend lines that haven't been visited in a while. In other words, we had this trend line starts there. We touched it here, had a visit there. A near visit right there. It's been a while, and that would be an ideal pullback target and price support below as well. So 2116 or 2117 we'll call that, and 2005 right there. Your first two potential pullback targets for Alphabet Class A. Visa's a big one to watch. There's our primary uptrend line. And let's move a little faster here so I can get through them all. Texas Instruments, another big one. See a lot of semis. That's the big part of the tech sector, obviously, these semiconductor stocks. And let's see where they go. Same story. It's in an uptrend. This trend's been very resilient. A lot of these stocks shrugging off the divergences. I mean, we've had little corrections along the way, but nothing big yet. There's a potential target should this uptrend line. I'm not crazy about this uptrend line, by the way, guys. There's not a lot of reactions. It's not clean. There is some divergence. Not one of my favorites, but if we get a healthy correction, there's big support back there at 160. Now, it's pretty aggressive targets. It's going to take the indexes breaking down. That would be about a 17.5% drop. Other than that, like I said, not too many clear levels. Let's move on. There's Starbucks reporting tonight. That's what the chart looks like. Tomorrow morning we have Boeing. Boeing broke down. I had it break down recently. I have this uptrend line here on the daily chart, and I had a sell signal about a week or so ago right there, and it fell to my first support at 231.15, bounced, but it's below trend, and it also put in a divergent high there. Just one to watch. It's a market mover, crowd favorite. Apple AAPL, same story. Apple peaked back here a quarter ago, 3 months ago. Last time they reported earnings, they had put in a divergent high. It was a breakout to new all-time high. Record earnings. blowout quarter, but yet the stock sold off and remains below that level now. So this will be interesting. This is one I'm definitely watching. Again, it already put in a divergent high. Should it pop and take out that high anytime soon, let's say today, after or tomorrow, after they report tonight, any marginal new high will be a divergent high. Now, it doesn't mean it can't keep going through there. At first, it'll be a marginal new high, and if it powers through and takes out the divergences, nothing but bullish. Otherwise, if it falls here, it just means that was the top. It peaked last quarter. And if it pops to a marginal new high, it still has a bearish technical posture. So it's a breakout to new highs that I wouldn't be chasing, just like this one. That was a breakout to new all-time highs, and it failed. Why did it fail? Well, the stock was overbought, and it had negative divergence. All right, next up, Facebook will report tomorrow also after the close. Same story. I mean, this is a common theme here, and it's been for a while. We get these divergent highs. And again, it's not as if they don't pan out. Facebook had a divergent high at this point back here, only in the PPO, and it still led to a drop well into the double digits right there. Now we have divergence on both indicators, and we'll see what happens. So one way or another, we'll know this, probably heading into the weekend, how the market reacts to all these big earnings. Qualcomm, CQOM, big one as well. And here's one that already peaked. You hear about the tremendous demand for semiconductors, shortages in the industry, but yet, this one peaked way back here. That was probably around the last earnings. Took out a primary uptrend line, and it's been in a downtrend since. Big levels to watch right here. That's 104.73. That was a big support level here. See the gap support, and then it held the top of that gap for a while, broke it, and gaps once entered are usually backfilled, which it was. And so then the bottom of the gap has acted as support, 129.62, and this has been bouncing around in that range. So that's what you want to look for. Bullish if it can break to the top of the range. Bearish if it breaks to the downside, and that should take us down to about 109.80. If you break to the downside, an upside break could mean new highs. We'll see. I just don't have. Let's react and see how these trade after earnings. And then, okay, so that was Wednesday, the last of the ones to report Wednesday. Finally, Thursday after the market closes, Amazon. Amazon probably looks better than just about any of the big fangs out there to me. It's the only one that doesn't have a divergent high. It did put a divergent high in way back here. You can see that all that big clean negative divergence. The drop was from that high right there down to the low. This was I was measuring it out to the right of the chart with my measuring tool. That was a 20% drop. So again, it's not as if these divergences don't pan out. And then what it did, it dropped 20%, and it's been consolidating since. We don't have any divergence right now on this one, and we're not too far off that high. Amazon, again, of all of them, probably looks better than most. But should it take out that high, actually you would have divergence if we take out that previous high. Here's what it's going to look like. Let's just say we pop up here somewhere to that 3,700-ish area. You're going to have big divergence. That would also show well on the weekly chart. See, when you come out to the weekly chart, here's what I had. I've had this for a while. This line shows a potential breakout of this. See this consolidation range we've been in? You can see it very clear on the weekly chart. On face value, bullish if we get an upside break, bearish if we get a downside break. Downside break would take us to this primary blue uptrend line, maybe all the way back down here to 2043. That'd be a big drop. However, any upside breakout of this range, I would put decent odds that it fails, that it's relatively short-lived. What is relatively? It could be days, it could be weeks, possibly a couple months. But I say that because you have big divergence building on all these indicators down there. Potential. This is what I call potential. These indicators have recently crossed up. They're pointing up. So, a pop in Amazon would look like this. Now, it's hard to see Amazon doing that with the rest of the fangs going down. So, again, let's just see what happens this week. Unless you're a gambler, you probably don't want to bet very hard, long or short on the indexes, especially the NASDAQ 100, until all those stocks are out of the way. Okay, so that takes care of earnings. That's what I'm looking for there. Now let's run through the charts of the futures real quick, and we'll wrap it up. S&P 500 E-mini futures, the levels I want to see taken out is about 4,100. I've been talking about that for a while. Divergence continues to build, and that's why I favor that once all these earnings are out of the way this week, the big earnings reports I just covered, and the dust settles, and might take into next week, we'll probably take that level out. That's what I'm favoring because of the technical posture. You know, we've had these divergent highs, divergent lows, divergent high, divergent low, divergent high, divergent low, and divergent high. So, you know, why would I think otherwise? All right, NQ would be right here. This is a level to watch. It's not a marked level as far as that line, but it's right about 13,700. You can see right there. That's what needs to be taken out to get a sell signal in NQ, along with the breakdown in ES. Okay, and should that scenario play out, whether it does or doesn't, sometimes treasuries do their own thing. Quite often they're trade inversely to the stock market. Recently there's been somewhat of a positive correlation here, and this is ZN. ZN's still at that flirting with that uptrend line and the 132.094 support, and I favor a pop up here. I still favor a move up to that next target about 132.313. It'd be ideal if it can reverse here soon and not take that level out by much. Again, you can use a tight stop there, or you can give it a little more room and try to stay with this trend. We're in a near-term uptrend. Sometimes the uptrend lines, especially when there's not a lot of reactions like this one, sometimes they'll have to be redrawn, you know, if you get a little pullback and then a thrust up. So that's ZN. To trade that via an ETF, you'd use IEF. ZB is a long bond, the 30-year Treasury bond. This is also a 60-minute chart we're looking at. There's your near-term uptrend line, and you want to see a breakout above 159.05. So you can either buy pullbacks to the trend line and or a breakout above 159. That would take us up to this next target here, 160, 152, and then possibly, if that's taken out, 161, 314. Alrighty, next up would be, let me go over the grains. So the grains have had a nice run lately. And there's the opening bell. This one's wheat ZW. The ETN for wheat is WEAT. Just leave out the letter H. Hell of a run. This one was pointed out as a long trade idea back here, objective long entry on this breakout. And we were walking up this uptrend line, and then this swing went just near-term parabolic. Now, at this point, we have negative divergence. I think it's a great time, if you've caught most or all of this trend, to really tighten up stops at this point. Where to? And again, active trader. Long term, I'm still bullish on wheat and all these commodities. The inflation cat is out of the bag, and I don't think the Fed's going to be able to contain it. They'll come in and knock these down, and these things will have corrections along the way. In fact, I think wheat, we're probably going to get one here. There's a nice reversal so far today. Potential targets you can see here: 731, 562, 715, 232. But I think we'll come back probably to this trend line ultimately, and that might be a good place to cover a short on wheat if you're looking for a quick pullback trade, and or another long entry if we get back down there, maybe all the way back to 678. We'll see. They've been buying up the pullbacks pretty aggressively in these commodities because we are in what I believe I made the case to be an early stage bull market action. All right, next up, closely related would be corn, if I can find that chart here. ZC is a symbol, and you can trade this in the ETN CORN. Very easy to remember. ZC are your futures. Since I started the video, it just broke down. I had a trend line here. It's comparable to the one on wheat. These guys tend to move together. No coincidence. Look at the trend line there, and then that steeper trend line, just like wheat. So there's corn. So I'm calling wheat and corn down. From here, there's your negative divergence. There's your potential pullback target. Right there on corn. Next up would be related as well, soybeans, CS. Why? Because these are your grains. They are in that ETN JJG, which I've highlighted before. There's an uptrend line. Here's a potential pullback target. There was a breakout there about 1443. This is a 2-hour candlestick chart going back 6 months. If I look at an hourly chart, if you want to trade this one, by the way, soybeans, SOYB is the ETN. There's your uptrend line right there. If corn and wheat break down, soybeans probably will as well. It hasn't done so yet. And there's your target. Let me give you a target for your futures traders. It's a little aggressive. Again, you might keep that in mind. If you just want a quick pullback, you know, you can look for these reaction highs, you know, find some support in between there. But if we get a healthy correction, we could see soybeans back here down to 14.49 or so. Now the cattle and hogs have been moving inversely. This one is LE's live cattle, and you can see when the grains had that parabolic run recently, that big spike I just showed you in wheat and corn and soybeans, you had a sharp down in live cattle. So therefore, you know, using logical deduction or reasonable deduction, you would say, okay, well, if the grains pull back, then you're probably going to get a rally here in live cattle. So you can take an aggressive shot right here at support. It's at support about 115.388 right there, right off support, and or wait for a break of the trend line. Minimum target there is about 118, and or just let it ride and kind of maybe I'll try to align it with those pullback targets on corn and wheat. Maybe they, you know, there's that much left in upside in live cattle if those targets get hit. There's a potential target would be up there about 122.347 right there. Again, that's live cattle. There's not a direct ETN for this that I'm aware of. There's COW, but that trades both lean hogs and live cattle. I like live cattle better than hogs right now for a potential long bounce. Alrighty, I covered treasuries. Oh, crude. I want to update you on crude oil. CL, you can trade via the ETF UTO. I'm sorry, USO. I'm trying to talk fast, guys. Get this out to you guys as quick as possible today. There's that level back here. I highlighted, said we'll probably get a rejection off there. It was my primary scenario. We did, whatever that line is at, which is about 62.60, right about where we're at right now. It's resistance, bullish near term if we can break it. And then bearish if we get another rejection, and then even more bearish if we take out the recent lows right there. So this just a recent trading range in crude oil right there. And if that level goes and that $60 level just below it, we could come all the way back down here to that 57.49 level again. It's been a big support level for recent months here. Natural gas, I mean, this one's been like hitting the easy button recently. I've highlighted these pullbacks to this trend line here is objective long entries or re-entries. I mean, you can just game these 3-4% rips, you know, since yesterday's highlighted, it was right there. We're up another, what is that, 5%, and you know, and that's what we did last time, about 5% right there. That tends to be the MO. Sometimes you go a little longer than that. So, you know, simple stuff. Watch, rinse, repeat. You recognize a trend, buy pullbacks to the support until the trend breaks, or you see some clear divergences. Right now, I don't really see that. You know, we have potential. If I snub that line, that's a higher high there, the PPO, slightly higher high in the RSI. So it looks like we're probably good up to my next target there, about $3 right there on that gas, give or take. And UNG is that ETN for that one. Finally, let's see, I'll just mention one more here. I think I'll look at HG copper. Copper looks ripe for correction. These are copper futures. This is an hourly chart, 3-month chart. I highlighted this head and shoulders pattern back here a couple months back, and we broke down and hit that first target right there, 318. Since then, we kind of been moving sideways. I haven't made any updates, and no reason. We hit that target, bounced, and stuck in a trading range, broke out. But most recently, what I see standing out here is this nice little clean near-term uptrend line, some divergence right there, and looks like it's starting to crack. So I think we're going to pull back in copper right now. Not one of my favorites, but again, I'm throwing out trade ideas. I think I wouldn't mention it if I didn't think it had a shot of playing out. I would call that one down to about 430 right there. That's a nice support, so that would be a drop. And you can use CPER as one of the ETFs. There's a couple out there that track it. That'd be about a 3.75% drop to that target. You know, if you trade futures, not a bad move at all. Potential uptrend line that could come into play as well, so one to watch. Okay, let me wrap this up, get it out to you guys again. Don't forget, a lot of earnings on deck this week, so whatever you bring home, especially when it comes to the indexes, which I forgot one. I told you I'd wrap it up here, but I forgot the small caps, and I wanted to update that. RTY, in recent videos, I highlighted this downtrend line right here. It said bullish if we break out above it, and we did. We broke out recently, but we rallied up, took out all both these first two resistance levels, and this one's even bigger, 2300 right there. That's a pretty big level. I've had it for a while here on my RTY chart. Again, these are small cap futures, same as IWM, the ETF. And so there it is. This is at resistance as well, and we even have some divergence forming, which says we're probably going to get a pullback here in the small caps, would be my guess, versus a breakout because of the divergences. So pullback targets, well, any of those levels down below, maybe even a back test of that trend line. And that is it. I'm going to wrap it up. 25 minutes, not bad. Covered, good number of securities there. So I'll post an update on anything that stands out today, and of course, updates throughout the week as we get these big market leading stocks reporting. This has been Randy Finney with Right Side of the Chart. Have a great day.